Broadcast is now starting. All attendees are in listen-only mode.
Hi traders, welcome to the live webinar with Admiral Markes. My name is Chris, and this video, of course, webinar and later on video, is focused on wave analysis, using it on a daily basis. So as you might know, I've been doing, of course, wave analysis with Admiral Markes for a couple of years, and you can find that, of course, on the website. Let me show you, first of all, very quickly where you can find that. Right there, go to analytics, wave analysis. All right. So I wanted to share basically with you how I do that, how I use it, and how it could benefit perhaps for your analysis. All right. But before we do that, though, as always, we have two disclaimers to discuss. First of all, the fact that this webinar and video later on is shown to a global audience, but it may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more details about that. And second of all, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with the disclaimer and you are aware of the risk involved when trading. All right, thank you so much for your attention on that. So now, first of all, I would like to indicate, Admiral Markets is exceptional with regard to waves because there are just very few spots where you can find waves. It's it's more rare than other types of analysis in a way. So that's great for you that you can find that at admiralmarkets.com. All right, and you will have a daily update of one of the majors from myself. Now, I think personally, maybe some of you already know that follow my wave webinars and wave analysis already. But for me, I think the biggest value of wave analysis is not just necessarily that the waves explain everything. I don't want to over rely on my wave analysis to the extent that all my trading decisions are only based on wave analysis. That is not my intent. My goal with wave analysis, how I use it, is more as a tool of confluence. I use it to understand the market structure better, and in some cases, to either avoid trading or to kind of give a green light to that particular pair and time frame, and then look for entries. So it's more like a filter: do I trade it or not? And can I gain value from wave analysis to understand the overall structure better? Maybe sometimes I find a better entry because of it, but it's not like a standalone tool. Now, you can do that. It's not to say that it's impossible. Definitely, many traders do, and it's certainly something that there's nothing wrong with it. It's just a little bit more difficult because you need more experience in waves. You need to understand when you might be, a little bit too much kind of biased by the wave analysis. And if you only have wave analysis, it's difficult to find that balance. If you have a lot of experience, eventually you can get to a point that you use waves only. But it's just more difficult for beginners. So I think it's just more convenient, more practical, more beneficial to use it as one of the tools and still add other aspects that make trading decisions easier. Whether that is fibs, moving averages, trend lines, Admiral Markets pivot points, or Admiral Markets Keltner channel, or any of the other 60 plus extra features that MetaTrader 4 or MetaTrader 5 Supreme Edition plugin has. Any of those or combination of that, I think is useful for the actual trading decisions. Whereas wave patterns is great as part of the analysis, right? When I analyze, I look at support or resistance, trends, and momentum, and thirdly, patterns. One of those patterns, is wave patterns, chart patterns, candlestick patterns, time patterns, divergence patterns, right? That's what I do to analyze the charts. Not everything may be on all time frames on all charts because that would be a lot of, a bit demanding. But you got to, find a shortcut to find a way to find the charts that you think are interesting. And wave patterns sometimes is one of those I use, and I say, okay, this is a clear, like probably pretty decent chance of a wave 1, 2, and try to trade the wave 3 or C. I'm using wave patterns to find a trade, but it wouldn't be the only thing I use. So yeah, that's my main message. Now let's move beyond that. First of all, doing very well. Thank you, Mocha and Dushan. Good to see you here, and happy that you're here. Trading a little bit slow this week. We managed to grab a pound yen. So that was nice to the downside, but otherwise a little bit choppy market, I think. But I hope that you're doing well as well. And basically, I think that the main value of waves is understanding impulse and correction. So when you have these movements, right? The price is falling very quickly, then rising quickly, then going sideways, continuing up, falling quickly, right? These patterns, you know, impulse and correction is in itself a very valuable tool to understand these market movements. But if you know the waves a little bit better, then you can go beyond that. You can go beyond the fact that impulse and correction, but you can start labeling them. So when you see this, for instance, clear, when you see 5 waves down like this, and then you see 3 waves up, then you could already understand that this is a wave A or 1, for instance, that this is probably wave 2 or B, and that there's a good chance that price will turn back down for wave 3 or C, right? So if you just only understand impulse and correction, you would understand that this looks impulsive, that this looks impulsive, but you wouldn't have that extra kind of information or insight. But if you know the wave patterns, you know that there's 5 waves down, 3 waves up, so there's a good chance that price will turn back down and make an impulse to the downside, right? And then you see, for instance, another 5 waves down, push all the way to a far target. And then you see a corrective choppy reaction like that. In that case, if you know impulse and correction and wave patterns on top of that, then you know that, okay, this is probably wave 3. You would expect price to make a shallow wave 4 at some support level. And when price breaks through that pattern, you're on guard that there could be another wave 5, for instance. So it gives you more ability to understand the impulse and correction in more depth, to understand what is more likely for the next swing, whether that's impulse or correction. You'll also have more understanding whether that will occur. And you can use that for better trading decisions, right? Generally speaking, understanding momentum and correction is useful. But with waves, it just gives you a little bit more context and a little bit more better idea about how to use that. So impulsive waves, let's take a look at maybe a live example where we can take a look at impulsive waves and corrective waves. So let's pull up this euro-dollar analysis from today on admiralmarkets.com. Once again, just as a reminder, just go to analytics, wave analysis. All right. Now, euro-dollar bearish break and continuation expected below 117.50. All right, so let's take a look at a little bit at this 4-hour chart. So, for instance, here we have at the very top, you don't see it too well, but you see the price is going sideways. So price was probably pushing up, moving down, didn't break the bottom, then moving up again. So before that, there was some wave 1. We don't see that on this chart, right? But it made an ABC and then started to turn out this resistance to the downside, broke through support. So when you get a break like that, that could, the wave patterns help you understand that, okay, price is making a correction here. There was impulse to the downside. There's a chance that we could have another impulse to the downside. So that's how you can use that for your benefit. But when price does break and there's breakout candles like this, it could also be another way to use it. Could be to zoom into lower time frames and look for pullbacks or continuations on lower time frames, because there's a chance that we're in a wave 3 or C at this point, right? So, and indeed we had 1, 2, 3, 4, 5, 4, 5, 4, 5. So it allows you to trade these wave threes on lower time frames and to perhaps wait on this time frame or one lower time frame for these kind of a little bit deeper wave four pullbacks. Not very deep, but a little bit, as you can see, a little bit here, a little bit deeper, a little bit. So gives you more confidence or understanding of how deep a momentum can go and how shallow a correction can be. You know, wave four, for instance, here we expect one more wave four. Typically are shallow corrections like these fibs, max 50 fib. So that's all kind of useful information to understand where the correction could end and where a new impulse could start. Looking at the hourly chart, there we go. Here too, once again, you can see ABC correction within the wave four, ABC correction within the wave four. So when price is in a downtrend like this, price makes upside, downside, but it's a choppy downside here, for instance, right? And we see a trend line, support trend line, then we could already be on guard that it's not maybe a good moment to trade it right here as yet because of the potential ABC and the fact that the wave three has been completed. So it helps us wait a little bit for the better moment, avoid entries too soon or too late. So there are many practical ways we can use it. Today, I was expecting euro dollar to be in a potential wave four, but I needed the price to stay below 117.50, and I needed it to break below support. It never broke below support, so I didn't trade it, and it actually broke to the upside. It broke above this orange trend line. We can take a look at the live charts now to see what happened with the euro dollar today. That was, how I had it this morning. Oh, 1 second, folks. There we go. So MT5 platform. And what I was showing was basically, let me insert a fib level. 1 second. Let's see, I need a fib. There we go. That's easier. All right. And as I said, break above 117.50 would invalidate or make the wave four less likely. Like this. Whoa, I'm making I'm making boxes instead. That's not what I wanted. Let me redo that. There we go, wave four. This is, I think, still valid. I think it's still possible that this is a wave four, despite the deep 61.8 fib, because it didn't go into the price territory of wave one. If it did, then yes, that would be invalidated. It would probably not be a wave four, and there would be something else going on. So what is the invalidation level? It is basically this bottom. What is the confirmation level that this is a wave four and down we go for wave five? That is probably this trend line, right? So that is very useful info. One could trade it in here, but that's riskier because price has not confirmed the breakout to the downside. I only take trades at these fibs if I'm very certain about a wave count, about a pattern, about the overall market structure. Not so certain about the euro dollar, I wouldn't trade it here due to other factors. We would have to analyze the euro dollar in depth, which I don't want to do here because this is a wave webinar. But for the moment, this is the invalidation level. A break above the 61.8 fib, does make a wave four less likely. Break below the channel, as long as it doesn't hit this invalidation level, would probably be a wave five and would confirm that likelihood of a potential break to the downside. All right, so back to what I was showing today. So yes, we had this counter trend break, but price is stopping at the 61.8 fib. So let's see, it's a pretty interesting spot. If it breaks one more time, it's probably not a wave four anymore, and I would redo this wave patterns. There's nothing wrong with that. There's nothing wrong with changing wave patterns. Because there are always a couple of options or more possible at any point of time. That's one of the disadvantages with waves, is that there are multiple kind of scenarios, and I'm always choosing the one that I think is the most likely. And but that doesn't have to be necessarily the one that plays out. I think that many times the wave analysis does play out as expected. I'm hearing many updates, so let me just close this for a second. All right, so basically, doesn't have to play out as expected, but that's why these invalidation and confirmation levels are important, because if it goes through invalidation level, then you know that that particular wave count is probably incorrect or didn't play out as expected, and it's good to look for a new count. If it's confirmed, that's great. Then your wave count is good, and maybe there's a trade, maybe not. Depends how much you like the particular setup, right? And that depends on other factors. At least for me, that depends on other factors. So let's go back to these slides. Let me see. I think I lost track about what impulse and correction. Okay, so it's just useful for understanding the context of impulse and correction and understanding patterns. So when you see, a triangle pattern, when you see a descending wedge, what do these patterns mean? And the waves will help you get a little bit more feedback about that. All right, talked a little bit about invalidation and confirmation levels already. So that part I hope is clear. If not, feel free to use the chat. When I use waves, it is mostly when there's clear confluence and clear structure. So when we take a look at example here with this euro dollar, I would like to see at least a structure that is appealing, that I think there's a good chance that price will do as expected. And if not, then I would rather wait, or I rather place more emphasis on the confirmation. So one trade I skipped, for instance, on the euro dollar was a bigger reversal to the upside. There was a big pin bar, daily bullish pin bar here, and I thought that the correction could go further up. What I was waiting for was price to break one more time to the upside here, and I would be taking a trade on the euro dollar to the upside. But that never happened, in fact. So I avoided, although I was expecting a bigger correction, I didn't trade that. One trade that Nana took, for instance, was in here, right? And for the downside. And to me, there was a good chance that this was going to be an ABC. So I liked that setup, and indeed price broke through the support, and there was a downside continuation. So this was one setup that seemed good because the pattern looked like an ABC and looked like a correction pattern. And so the waves helped confirm it. Whereas in the second case, the first one I talked about here, the breakout, it never happened. So I just avoided trading my wave analysis because I didn't get the confirmation. Because if I would have traded my wave pattern expectations, I would have been long here, and it would have been a loss. Rather, I waited for price to confirm what I think will happen, and it didn't, so I didn't trade and didn't lose anything. Here, the market confirmed what we thought, and we made gains. Now, it's not always as perfect, of course. Sometimes, obviously, we have losses too. Everyone has losses, is normal, right? So waves will not always help with that ideally, like this. But these are just two examples where it did help. There are also, I'm sure, examples where it didn't help. Just don't remember in this particular piece of price action. But let's say I would have shorted the 38.2 fib here because I think it's a wave 4. Well, I would still be stuck in that trade, and it could easily be, turn into a loss. Just to give you a hypothetical example here. All right, so I tried to pick the ones that have confluence, with other tools, and there's a clear structure. And the reason for that is because I do show what I think is the most likely wave pattern, but it doesn't mean that that wave pattern has a high likelihood. So let me explain that. What I mean is that I will always show my most favorite wave pattern, right? That's the one that I like the most, the number one. But there might be a second that I don't show that is very close to it. Maybe this I think has a 35% chance of working out, and the next one has 30. So this one is the best, but the second one is very close, and there's a small gap between them. So it's kind of like both have a decent chance of playing out, right? Whereas some wave counts, I think, are very likely. Maybe, I don't know, I would attach a personal likelihood of maybe 50 or 60 or maybe even 80%. And the number two doesn't seem likely at all to me. Maybe that would only have 5 or 10. So that's where there's obviously more confluence, and I expect that pattern to play out. And in that case, sometimes I take an early entry, but most cases I wait for confirmations. So basically, yeah, if you're unsure about your wave count, you should try to give it less emphasis in your decisions. If you think that the wave count is more clear, it makes more sense, then you can of course discretionary decide to say, okay, I think this is more valid and will have more impact on my decisions. Maybe not everything, right? But a little bit more. And it all depends on your experience. As I said, if you're a beginner or if you're less experienced or just starting with wave patterns, it's better actually it's good to start with it. It's good to build up that experience, but not use it too much. Just get a feel for it. Get kind of like an acquaintance with it, and then as you gain experience, you'll see that at the beginning, of course, you'll make kind of assumptions maybe that will not work out most of the time, but if things work out well, you will probably see it develop better and you'll get a better feeling for it. And as that grows, you'll get more confidence and in analyzing it, and it will be more familiar. So my advice is typically to build it up gradually. And the problem is that many traders don't build it up gradually. They check out wave patterns, try it for a day or two, somehow it works at the beginning, maybe luckily, then it doesn't, and they stop. It's too quick. It's too it doesn't go that fast. You have to, especially with wave analysis and patterns, it takes time to understand and to use it properly, and you have to build up that experience. It's not something you can just read and apply in a few hours or a few days. So when you have the mindset of learning and applying it for the long term and just building that experience gradually, and you can then do your own wave analysis and then check mine and see why there's a difference and understand what I write about it, and see what you can learn from that, then you'll gain that experience and you'll get better at it by yourself. So that's very important, I think, is that process, and not to have too much expectations from waves at the very beginning. Because if you do, I think you'll just get disappointed and you'll cast it aside. And I think that's a pity, because I think that it deserves more time. Now, ultimately, of course, obviously, not this is not necessarily for everyone. So if you do try it out for a while and you say, no, really, it's not for me, definitely, of course, obviously that's your choice. You need to find the tools that match your view, what you feel comfortable with, that you like. And, if you've been trying it for a few weeks or months and you don't have that click, yes, maybe it's better to move on to other things and other ways of looking at the market. I think this is a great tool to start the day with, to understand the market structure and get a deeper knowledge of it. But it's not for everyone, and there's nothing wrong with that. And some people who use it, they use it in different ways, as I already indicated. So just got to find your niche with this, if you use it, if at all, or if not, also it's okay, right? as you understand, I'm a big fan. So for me, it would be difficult not to look at the charts with these concepts in mind. So any, this is my part. Any questions from your side? By the way, if you're interested in checking out some other tools that you might find interesting, you can do that as well by platforms. All right, and then go to MetaTrader Supreme Edition. That's the plugin I just mentioned already earlier, with a lot of extra features, 60 plus in total. So it would be good to check that out after the webinar. If once again interested in other things like trading, you can open an account here. Of course, analytics, all of that is on the admiralmarkets.com website. Well, for the moment, any questions, feel free to do so now. This is your moment. If you're curious about any particular wave count, feel free to ask that now. You can see that here, this is, for instance, the pound dollar. You can see that was expecting a wave 4 and 5 formation right here, right? And you can see that if we go back into the past, right, that we were anticipating a wave 3 and a bigger wave 1, and you would see it then develop as you go along. So it's, I think, worth it to take a look, even if you don't do waves yourself, because at least you have an idea about the market structure and what kind of wave patterns might be unfolding. So I think it could be good to keep an eye on that at times. All right, and here you can see the dollar yen. There's also weekly wave analysis for the long term, which you might find handy. So that's looking at daily, weekly, and monthly charts. Most no questions so far, but the question number one that I get from traders always is, how do you use it for trading, right? How do you translate the analysis into trading? So just in case I didn't answer that properly, basically, it is really when I have the most confidence in my wave count. And what I typically look for is kind of internal structures of a certain wave. So for instance, when here with the dollar yen, if you see 5 waves up, 3 waves down, or if you see a break of a high, using other tools as well, of course, or if you see kind of a corrective choppy move down like that, those are all kind of clues that a certain wave pattern is taking place. So when I get extra tools, confluence of patterns, if I see chart patterns playing out, then I see this sideways move, that helps understand that there's a good chance of continuation higher. So for me, when there's extra confluence in the wave patterns, when I feel more confident about my wave pattern, that's when I often trade it the most. If I'm unsure, then I would probably skip it, or I would set up some invalidation and confirmation levels, right? And still wait for that extra push. How much confirmation really depends on and how much I like the setup, really. I mean, with the dollar yen, for instance, a break above this resistance, pretty good, right? I think pretty nice. Break below this support trend line, I would not trade, because yes, I could expect a wave A, but ultimately the momentum is pretty strong to the upside. So I would, in this case, not use my wave analysis maybe right away for trading it to the downside. So it allows me to understand the market structure. It allows me to understand where the decision zones, where's the space, and then I start to cherry pick which trades I might like within that vision. And I don't trade everything any pattern, every wave movement. I kind of cherry pick the ones that I like the most. I make a plan. I set up a plan. I wait for certain confirmations, and then I take the trade. And that doesn't happen with every single swing. There are many pairs, many time frames. So I pick the ones I feel most confident with. So do analysis, and then at the end of the day, a lot of that gets filtered out, and then I try to keep the ones that I have most confidence in. And that is a little bit of a process that takes a little bit of experience to make those decisions. So that's how I use my wave analysis. On the three majors, dollar, yen, euro, dollar, pound, dollar, I use wave analysis less on other instruments. For those, I sometimes use it if I see it, if it's available, if there's something very clear, but it's not something that I do day in, day out. All right. Okay, that's my 2 cents on waves for the moment. I think I covered all the most important things I wanted to share with you today, at least. Maybe something else will pop in my mind later that I forgot, but I can always add it in the future, of course, no problem. And but hope that this gives you a little bit of better idea about how to understand these waves and how you can understand wave analysis and use it for seeing the market structure in a better, more clear light, perhaps. As I said, feel free to check out admiralmarkets.com for more info, and wish you all good trading. Cheers.